All right, welcome back everyone to another episode of Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, everybody?
Man, oh man, if you weren't put today, you made some good money. If you on calls, you are deep in the red. And I hope you got some long-term calls, man. We talked about this last week. We said that the market looks like it's getting to a place where it's getting a lot of rejection on that top. We generally not trying to call any top, but whenever we see a little bit of weakness in the market, we call it out. And guess what, man? It happens. This is the last, and I keep saying that this is the last month of the second quarter. There's gonna be some rotations. There's gonna be some heavy profit taking. You know what I mean? So exactly that happened, and we are seeing some. I mean, today I feel like the broader market just came down. It wasn't like concentrated in one section. I mean, you could say QQQ, which is a tech industry, the tech ETF. But other than that, man, I feel like it's like the whole market kind of just came down a little bit today, and we'll talk a little bit about into like why that is. But overall, man, we talked about this on Wednesday. We said that the stock
Sh-
market looks a little weak at
Shout
that
out to
top.
shout out to Billy for calling it. Go
I
go
just tried,
go
man.
go listen to the episode on Wednesday and go
Yep,
go hear what Billy said on Wednesday because it
I'm
was
telling you.
spot on. So
I'm telling you, man.
continue.
People are taking profit. It's time to take profit. It's time to rotate. It's time to take some. And you said it too. It's like if you're up in a lot of those positions that ran through 3, 4, 5, 600%, please take some profit. We literally said that. Take some profit off the table. I hope you guys listen. I hope you guys take some profit because what happens is you book profit, then you can take some of that and start averaging down on some of the positions or start looking for sales. You know what I mean? My thing always when we start seeing the headlines are saying the stock market is dropping, the stock market is crashing, all of that stuff. This is for us. This is a time to like start looking at some of those stuff that's on sale, right? So again, I mean S&P tumbled like what 2.64%. Dow Jones was down like 1.35% in a day. Like that's a lot, guys. The AI chip. I mean, Nvidia was down like 6.2%. AVGO dropped another 7.9%. Micron was down like 13%. And the crazy thing is the treasury yield spiked following the employment data with a 10-year treasury yield declining past 4.5%. And I keep telling you guys, like last time I think we were like 4.1, 4.2, we're at 4.5% now. The two year yield rising to 4.16%. This is the highest level in a whole year. I mean, like I don't know what to I don't know what to say. The only sector that I seen probably did good a little bit today, probably like consumer staples, healthcare, you know.
So
But if
what
you look at broader market, man, everything was like even Bitcoin wasn't immune to this. Bitcoin is down to $60,000 for the first time in like God knows how. Gold was down, silver was down, like all of those things that you think people run to for safety, all of them was down today. So what is happening in the market, Wale? Talk to us, man.
all right. So uh when you look at today's price action and you look at what sold off, I think Billy hit it on the nose. This was mostly concentrated in technology. All the names that have had the tremendous run um, since the beginning of April all got sold off. I mean, I'm
Mm-hmm.
just looking at Marvell was down 16%, ARM was down 12%, Intel was down 12%. And then I start looking at the indexes. The SMH was down 9.2%, XLK was down 6%, IGB 4.21%. So, and then we look at the sectors that did well: consumer staples, a defensive sector; utilities, defensive sector; real estate, defensive sector; healthcare, defensive sector. And then financials was one of the more cyclical sectors that actually finished in the green today. So, what does that mean? Billy called it, he said it: rotation. Money is flowing into other areas of the market from a valuation standpoint that might be a little bit more attractive. I think one of the things that I always like to talk about is valuations always catch up to stocks at some point.
Yep.
At some point, valuations and fundamentals will kick in and say, okay, this has gone too far, too fast, too soon. And when it happens, I think, I don't know what episode I said this on, but I said that the speed at which a stock or the market goes up, remember, it will come down at the same speed or
Same speed.
even greater. Like, when's the
Yep.
last time you saw QQQ down 4% in one day?
Ridiculous.
It's been a while since we've seen that, right? So,
Mm-hmm.
at some point, when a market is moving, I think I said this in the last episode, what we've seen in the last month or so, or 2 months, is not normal.
It's unusual.
Like, it's unusual to see the market move. I mean, you're talking about stocks that are up 90% in 3 months, 100% in like 3 months. Some stocks don't do that in 3 years.
Right.
So at that point, it gets to you get to a situation where you have to like put on your thinking cap and say, okay, this is a little bit unreasonable, which is why we were saying in the last episode, this is probably a good time to take profits. From a macroeconomic standpoint, the jobs numbers came out this morning,
Mm-hmm.
and the job numbers were actually really, really good compared to what people were expecting. So some people will see that and say, well, if there are more jobs being created, isn't that a sign that the economy is doing better? I mean, President Trump came out and said stocks aren't supposed to go down with these job numbers.
I was cracking up when he said it.
But let's put things in perspective. The Fed has two mandates, right? Full employment
Right.
and stable prices. So if employment is in a good place where the unemployment data is not spiking, what is the next area that the Fed is going to focus on?
Mm-hmm.
Stable prices.
Yep.
What have we seen with CPI? It's gone up. It's gone up. Prices are gone up. The Fed's target is 2%. They are drifting further away from that 2%
From the
target.
target. Yep.
So how do you bring prices closer to your 2% target? Raising rates is
Yep.
one of the ways you can do that. And the market is starting to fear that the probability of a rate hike is increasing.
Mm-hmm.
And as that fear increases, valuations of stocks start to decrease.
Yep.
Why is that? Let's just say the 10-year yield goes up to 4.8%, 5%. Let's just use that as a hypothetical number. Basically, what that means is if I'm an investor, I can get a risk-free 5% on my money
Mm-hmm.
with taking zero risk, because treasury yields are considered zero risk because the United States is not going to default on its obligations. If they have to print more money, they're going to do
They're
it.
gonna do it.
So they're not going to default on their obligations. So from a valuation standpoint, when you compare that to stocks, where you do have the potential to make more money, but you have to take risk. It's kind of like the question, do you take risk-free $1 million today, or do you take a 50-50 chance at 3 million versus
Mm-hmm.
zero? That's
Mm-hmm.
the question. A lot of people will say, give me 1 million today, guaranteed. That's what bonds say when yields go higher, because it's like, okay, you can make 5% on your money, no risk.
Yep.
So that's what we're contending with. And if you look at the 10-year yield, usually when we start getting above 4.5 on the yield, that's when stocks get a little bit nervous. That's when they start getting a little bit nervous. So am I surprised by what I saw today? I think I'll say I'm surprised by the magnitude to a certain degree, but based on where we have gone in the last 2 months, 9 straight weeks of gains, at some point you got to balance things out, and that's
Yep.
what we saw. And I will say I don't know if we're done. I don't know
Yeah.
if we're done yet.
Yeah.
Yeah, I don't know.
Yeah. So two things I want to talk about is one, we saw the new Fed chair come in, and his whole thing was the Fed is not looking at the economy in the most modern way. They're still using old technique to justify whether they should keep rates high or low, right? With this new data, what do you think the talk is right now is happening in the Federal Reserve? Like, especially with this guy that's this guy hired in, recommended highly by Donald Trump, and trying to get to a place where he's able to maybe lower the rates, right? Because that's the whole thing with him and going after Jerome Powell is Jerome is taking too long to lower the rates. Jerome is taking too long to lower the rates, right? Now you have this guy who is probably in a predicament right now. It's like if you try to lower rate in this environment and things go south, you and only you will be blamed for it. If you raise the rate and things don't go right, you and only you will be blamed for it. So he is in not a good place right now, based on this new data that we're showing up. So
No,
I don't know what the conversation is happening right now at the Federal Reserve between him and his team.
yeah, I will say that the no matter how hard he tries to push on trying to cut rates, you can't do it in this environment.
Can't do it.
You cannot.
Mm-mm.
You cannot. Now, let's say unemployment gets to 5%, 5.2%, 5.3%, right? Maybe you make a case that, okay, we need full employment, so we're going to cut rates, but we're not there yet. So
Mm-hmm.
again, unemployment stayed at 4.3%. The problem that they have to solve is now they're going to focus on price stability.
Yep.
And I don't think we have price stability. I also don't think that we have seen the full blown results of this energy crunch
Shut down.
with
Yep.
with the supply and demand that we're seeing.
Mm-hmm.
So with all of that friction going on in the background, I think to me you cannot cut rates. Like
Yeah.
you cannot cut rates. And if we get a hotter CPI next week or a hotter PPI next week, I think that this market is going to react in a major way.
Yep.
Because I think if that happens, the odds of a rate hike go even higher. Because I think the market now is pricing at least one rate hike before the end of this year.
I mean, I don't even know, man. Maybe even before the end of the year, for real. Because I think what Goldman Sachs is saying, they're raising their probability of a rate hike up to like 20%,
Hmm.
while pausing potential future rate cuts to mid 2027.
Yes,
So
that sounds about right.
that is crazy. That is
Yeah,
crazy.
that sounds about right. Because we thought we were going to get what, two or three rate cuts
Yep.
this year. Now we're probably at zero.
Zero.
Now we're talking about no rate cuts until late 2027.
Probably a rate hike. Like that's a
Probably a
complete
rate hike. Yeah,
yeah, that's a
I'm
complete
t-
180.
I'm telling you, the day we get a rate hike, don't check your
Yo,
401k. Like,
just
don't look.
just close your
Just
eyes.
close your eyes.
Close your eyes.
Do not look. So I will say this. The Fed is not is not in a good place from
Yep.
a policy standpoint. They're not.
Yep. Yep.
And I heard that Kevin Warsh wants to shrink the Fed balance sheet.
Mm.
Whether or not the board is on, they want to do that, if they're on par with doing that, I don't know. But he wants to shrink the Fed balance sheet. Um, and if I'm not mistaken, that basically means he wants to take the bonds that they got on their balance sheet and
Hmm.
get them off of the balance sheet, which means infuse more cash into the market. That could be inflationary. That could be inflationary.
Yep.
Because you have to understand that he comes from a background in the investment world, private equity, that's his. And those guys, they make their big bets and they make a lot of money when lending is cheap and
Hmm.
when liquidity is easy to access.
Yeah.
When things tighten and there's not a lot of liquidity, they tend to take it easy a little bit. So
Yeah.
we'll have to wait and see how this plays out. But I'm pretty sure when bond spreads show up on Monday, I think we're going to be well above 950 basis points when you look at the spreads, and that's usually a time where I personally say this is probably a good time to start hedging. And
Yep.
Not
Yep.
get too aggressive with buying stocks, but get to a point where you're starting to make a list of, okay, what can I get at a better, cheaper price?
Exactly. And that's the other side of things that we got to look at too. Is like whenever we see those sell-offs, whenever we see those crazy drop that's back to back to back, it is a good time. Again, we talk about this over and over and over again. This is the time to start making this list. I feel like we had a broken record at this point. Like this is the time to start making a good list of stock that you were so interested in, but they were too high, were too, moving way too fast for you. This is the time to make those lists and start pointing where do you want to enter. You know what I mean? This is the time for it. I mean, I will say, in my opinion, probably wait till this quarter is over because I agree with Wale. I don't think necessarily we're done yet. We might see a couple of maybe see a week or so of like maybe like consolidation, but I don't know if we're done yet. You know what I mean? I don't know if we're done yet. So, but again, this is probably a good time to start like one hedging your position, hedging your long term portfolios, and two at the same time start making those lists. Like which stock do you really want to be in? That's probably going to be on sale.
Yeah.
But
If you was thinking about getting an MU at $1,000, you're gonna love it at eight something.
yeah, even a seven. Like honestly, I wouldn't be surprised.
Yeah. Like
Uh,
all of those names that you were like, oh man, I missed it. I missed it. Well, if those are stocks that you are interested in being in long term,
this is the
this
time.
is this is now the time. I'm not saying go out there and just go start buying blindly, but if you liked it at 900, if you liked it at 1,000, shoot, you should love it at 850. You should love it at
Facts.
800. So we got a VIX spike of 40% today.
Yep.
The VIX was up 40%. We're at 21. So, you know, that is, I'm not saying that we've reached the peak. We could see a higher VIX after we get
Right.
all this CPI data, but big spikes in the 20s, 30s, 40s, 50s. Usually a good time to start nibbling and buying long-term names, in my
Yep.
humble opinion. So,
Yep. Yep.
like, imagine if you bought the VIX spike from, we had a 35 VIX back in early March, and that thing finally came back down in late April. I mean, in early April, and the market took off.
Mm-hmm.
So, I think you got to always put things in perspective. Sell-offs, not always good, but does it present opportunities to get good businesses at cheaper prices? Long term, yes.
Yep. 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 But again, this is that when you see headlines red. I keep saying this. When you see headlines red, market is crashing. Market is crashing. This is the time where you need to run to the market and start figuring out where you want to be. Like literally, I don't know, man. We'll review this in about 6 months or so and see where we are. But I feel like we've seen this happen over and over and over again over the past couple of years. You know what I mean? So again, let's just hope that people are paying attention and are in the market. And again, we talked about this too, right? When you see stuff like this, you don't completely remove yourself out the market. This is the time to actually be more hyper focused on the market. This is not the time to run away from the market. So
Correct.
don't be scared when things are on sale. Do not be scared when you see red, because this is yeah, this is when a lot of money is made actually. So but let's move on to the next, man. S&P blocks SpaceX early entry into the S&P 500. I mean, I don't know why would they relax the rules just because it's Elon Musk, or this is gonna be like a mega cap listing right out the gateway? Like, I don't know, man. Like, you gotta prove yourself. You can't just be the new kid in the block and all of a sudden you want to be able to, play right away. You know what I mean? Like, chill. Like, prove yourself first.
Correct. You have to show one of the biggest things before getting put into the S&P. You have to show gap profitability for a couple
Right.
of consecutive quarters. And I think that what people are trying to say is that because of the valuation of SpaceX, because it's one of the biggest valued companies, or will be when it goes public, how can it not be in the index if the index is supposed to be represented the biggest companies, the top biggest 500 companies in America?
Mhm.
So just based on size, S&P was just like, no, that's not enough. You got to be profitable. And from a gap perspective, SpaceX is not profitable. And I don't know when they will be profitable from a GAAP perspective. It took Tesla a while before they got to GAAP profitability.
Yeah, yeah,
Eventually they did make it into the S&P 500, but I don't know how long it will take SpaceX to get there. And I will say SpaceX is a very capital intensive business.
yeah.
Like it is very capital intensive. Like they're raising $75 billion for a reason.
Hmm.
So when will they hit profitability? I do not know, but I'm actually happy that the S&P kind of held their ground rather than trying to force them into the index.
Yep, yep,
Because you force $1 trillion company into the index, let's just say you do, and that company drops 30, 40%, look at what's going to happen to the index.
yep. You're right.
Index investors, index investors are going to get smacked.
Yep,
It's
yep.
going to hurt. It's going to hurt. So, you know, I'm happy they held their ground. And I'll also say too, a lot of people were saying that people are looking for liquidity to buy into the SpaceX IPO. So they're taking profits and saying, okay, let me take some of my profits and roll it into the IPO SpaceX. So I
Yep.
got some dry powder.
That's
Kind
how
of
the
make kind of makes sense. It kind
yep,
of makes sense.
yep,
So, that's another catalyst that might be out there as far as why we saw such a magnified sell-off in the tech sector.
yep, yep, yep. No, that makes sense. Like I think there's just so many like there's so many reasons why we see things are pulling back right now. You know what I mean? So it's like there's way, way, way too many reasons. So again, I am glad, like you said, they didn't just let us, SpaceX into S&P 500. Let's, prove yourself, my boy. Prove
Yeah,
yourself,
yeah,
and then we can get you in. So
yeah. Because if you think about it, getting into the S&P 500, like that forces index companies to have to buy your stock.
hmm
They have to, like they're
yep,
forced to.
yep.
So I think today we saw that Marvell was getting added to
Marvel, yep.
the S&P. Who else was getting added to the S&P that I saw? Oh man, I'm drawing a
Mm,
blank. But I know Marvell was a big name
yep.
that was getting added. So yeah, I really say as an investor, if you're new to this game and you see a day like this, don't don't panic. It is part of investing. One day doesn't make a trend.
Right.
So it's just one of those things where you just have to, swallow the pill for now and, see what happens over the next couple of days. But I would be paying a lot of attention to the macroeconomic data that we're going to get. And then we got our Fed meeting on the 16th. No,
Yep.
16th and 17th. Will we get a press conference with this new Fed chair? I don't know.
You don't know.
We've we've seen the last of Jerome. We
Mhm.
get a completely different cadence of what the chairman wants to do starting this month, and we just got to wait it out. But
Yep.
I really think that we could be seeing a rate hike fairly soon. Now, if we wake up one day and the war is really completely over, that could change everything.
Mhm.
You know,
And
that
I'm telling you, that is going to be the play. It's because Donald does not like the market to be down on his term. You know, right now, there's nobody else to blame, right? I think for a while we blamed Jerome, we blamed Biden for the market coming down and the market's not doing well. But you are 2 years into your presidency. There's nobody else to blame at this point. This is now your administration. You know what I mean? There's nobody else to blame. So I agree with you. I think the next logical step to make this market to give some more pump into this market is to just make a deal with Iran as soon as possible. And let's turn this thing around so people can be more comfortable and forget about this whole rate hike and all of this different thing. So I don't know, man. It might happen this weekend. It might be tomorrow. You never know.
exactly. You don't know. You don't know.
Wake up in the
Like
morning, we have a whole 180 degrees going back the other way. It's nuts. It's insane.
like look what happened at the end of March. Like we were in the middle of a war, and then all of a sudden it's like
Yeah.
they want to make a deal, and
Yep. Everything went
it
up.
what everything went up.
Yep. Yep.
Does that happen this week? We don't know.
The weekends, man. The weekends, you never know what's gonna happen. But next week, economic catalyst, man. Let's look at some of the stuff that's gonna happen next week. I think Wale already mentioned Wednesday we having the CPI inflation report that's coming up. Thursday we have the ECB interest rate decision. That's the European Central Bank. They'll announce their benchmark interest rate decision. So we'll see, man. We'll see what happens. But I really want to like one of the biggest things I think we should focus on next week is the CPI numbers. Now, they are forecasting about 4.2% year over year, right? This is a major jump from like a 3.8%. Like that, we're talking about like a whole what 4% up. That's gonna be insane. Like that is gonna be insane if we actually get that hike. Uh, hotter than expected. I mean, we are definitely gonna get a rate hike by December. Like if we get to 4.2, we're definitely getting a rate hike, right? Um, then we have PPI, June 11th at 8:30 a.m. The wholesale inflation expected to rise 0.6% month over month. And you guys know like the PPI measures corporate input costs and serve as a leading indicator for consumer pricing pressure. So again, that's another one that people are going to be watching for. And then Apple have their WWDC 2026 keynote. It's coming in June 9th. Man, last year, I was freaking disappointed. I was expecting something huge from Apple. Didn't get shit. They were talking about, I don't know, man. It was just disappointing to me. So let's see, man. If maybe there's something surprising they're gonna say this time. What Apple's product is gonna be on a roadmap and all these different things. And then don't forget the SpaceX IPO June 11th to 12th. I mean, I think everybody's waiting for that. What do you think, man? I honestly think it's gonna be crazy to see Elon hit a trillionaire for like a few seconds, and then after that we see some stuff.
Dude, I don't like making predictions, but I'm gonna go out on a whim and say generational short opportunity.
Oh man, that's gonna be crazy.
Generational short opportunity. Because this is
That's gonna be crazy.
I'll put it to you like this. If we get hotter than expected CPI data and we get a rate hike before the end of this year, to me, I think you can probably see a company like SpaceX drop like 15% in one day.
Mm-hmm.
Because understand with a rate hike, the most overvalued companies are going to get smacked first. And I think SpaceX will be one of the most overvalued companies when it does IPO.
Oof.
I'll
This already
also
is.
I'll also say if Anthropic goes public before we get a rate hike and we do get a rate hike, Anthropic will probably be a stock that goes down like 20-25% in one day if we
Yep.
get a rate hike.
Yep. Facts.
So it's a risky it's a risky proposition, but I think that we're starting to shift more and more to the higher probability of a rate hike.
Mm-hmm.
And if we get a rate hike, boy, Mr. Trump is going to be on Kevin Warsh's neck.
He's not gonna try to fire him right away. It was like you fired.
He's going to be like, I made a mistake.
Take
I
him
made a
out. Take him out.
mistake. Kick him out. So,
Oh man, that's. I mean, like I said, this man is a very is he's in a predicament right now.
yes.
I mean, boy, oh boy, I would hate to be him right now. I can't imagine those phone calls. What's happening right now?
No.
But the only thing that, like you said, the only thing that can probably save him is a deal with Iran right now. And I honestly think this is probably a good time to make a deal to save this market. This is probably a good time to make a deal. I will go out on a limb. If it's not this weekend, it's next weekend or sometimes in the middle of the week. Maybe we wait till CPI comes out and maybe that'll be the day that we announce a deal. I don't know, man. It's gonna be really, really, really soon that we're gonna get a deal.
Because remember the last time I put this on my Instagram page. Remember the last time the 10-year yield got to like 4.5, 4.6%, and Trump kind of like backed up a little bit, got a
Mm-hmm.
little bit softer on his aggressive
Yep.
tone with Iran?
Yep.
Because I know that Scott Bessent, the Treasury Secretary, when rates get a little bit too high, I know he's tapping
Yep.
Mr. Trump on the shoulder, like, hey, you gotta
Yeah.
chill, bro.
You need to chill.
You gotta chill, bro. Because we also have to remember that as rates go higher, the debt service cost gets worse. And you're already at $37 trillion in debt. And it only will get worse from here because we know that the US cannot function without issuing debt.
Yep.
Cannot.
Yep.
If the US stops issuing debt, the entire financial system will collapse. And that's true with a lot of countries. So people want to call it a house of cards that's just waiting to fall over.
Yep.
Ray Dalio made some really, I said this on Wednesday, Ray Dalio made
Yep.
some really good points on Bloomberg.
Yep.
He's made some really good points on Bloomberg. And I know today, all of the Berkshire Hathaway analysts, and they had a meeting today, they were like, this is why we got $400 billion in
Yep.
cash.
It's just sitting there chilling. It's just sitting there chilling, you know?
Yeah.
So
So I will I'll leave it at that. That, we, as much as people like to see stocks go up, I said it on Wednesday, don't get caught with your pants down and
mm-hmm.
just be hyper focused on what the market is doing. You actually have to sometimes take a step back and think about what's the landscape of what's happening in the background.
Mm-hmm.
And we're going to get a clearer picture of that next week when we start getting economic data with CPI and PPI. So, man, they're expecting 4% year over year inflation. Oh, God.
Boy, oh boy. Boy, oh boy.
That's not a pretty number. When your target is 2%, that's not a pretty
Mm.
number.
It's not.
No,
It
it's
is
not.
not.
No.
Man, so honestly, man, this weekend is gonna be interesting. We'll see if any news comes out about the war. If nothing else, like I think with all these crazy drops that we had, we might see a good consolidation for maybe a couple of days next week, maybe all the way to Wednesday to CPI. After CPI, we might see some movement to the upside or downside, depending on what that number looks like. I won't be surprised if we get the numbers a little bit fudge around with, but we'll see.
And I think
So,
you got to understand when we got the couple prints that were hotter than expected, people were buying the dip.
yep, yep. So we'll see, man. I'm pretty sure
Yeah.
there was some. I'm sure there was some buying going on today somewhere, or maybe some orders being put into certain places. So we'll see. We'll see what next week looks like, man. But other than that, man, well, hey, let's wrap it up. Let me know if you want to leave the people with anything else. I mean, I feel like again this weekend, keep an eye on what's gonna happen in the news if there's a deal coming. If not, like I said, next week we're probably gonna see some consolidation Monday, Tuesday, Wednesday when the CPI drops. We'll see what the direction the market goes. And I would not be surprised. I always say this. I would not be surprised if we have a press conference that day that the CPI comes out. I would not be surprised if we have a press conference.
and I will
Especially if it's
also
gonna be a bad number.
and I'll also say that the two sectors that I probably might trust a little bit more in this environment, I'd say three. Finance, no, maybe four. Financials, consumer staples,
Mm-hmm.
utilities, and healthcare.
Yep.
Those parts of the market can are a little bit more durable in this type of environment.
Yep.
A little
Absolutely.
bit more durable. The one thing that did surprise me today was gold dropped pretty hard.
Yep.
I didn't expect that,
Which is weird. It
which
was
is weird.
weird. Yeah.
Yeah. So with gold dropping, silver was down 8%.
Yep.
And those are usually hedging mechanisms. And they were down too.
Yep.
Yeah,
But then again, both of those commodities rate they were running like
that's
crazy.
true. That's true. That's true.
So again, some people probably just taking profit. Like, if you've been in gold since like 2000, 3000, like you made a lot of money, man. Like you made a lot of money. So it's a good time to get out.
Yeah.
Um,
Yeah.
but yeah. With that being said, man, like we're just gonna keep an eye on this weekend and next week. But that is a wrap for today's episode. I mean, we covered a lot of stuff, man, from job report to FedRAX potentially hike by the end of the year, SpaceX being blocked from early entry into S&P 500, CPI inflation data, and then also we have the Apple and the all the war and all the stuff that's happening next week. So we shall see how next week is gonna look like. But with that being said, man, you guys stay smart and happy investing. I mean, don't go crazy. Don't go blow your port. All right,
All
y'all.
right,
Have a good
everyone.
night. Have a good weekend. Stay safe.
Have give a weekend.